welcome out. That sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the markets step at a time, looking at the news, the charts, market action, economics, pretty much anything that grabs our attention that we think is important, and give you guys some insight and analysis so that you can better run your daily routine. Welcome out, hashtag Team Tackle right in the chat. That is our official hashtag here at Tackle Trading. All my veterans know about that. And if you're brand new to our channel and our community here, welcome as well, new subscribers. And if you've not yet done it, click subscribe, click the bell. We do this show each and every day. Whenever the markets go live, we go live as well, 12:30 Eastern Standard Time. And couple things on today's show. That's all right, bro. Whenever you hear your own voice coming through reverb, it's always a little bit of a weird moment, but that's all right. We've got the Georgia runoff elections here today. There's some market chatter about what it may or may not mean. We're going to get Mark and Matt's take on that. Technically, we've got some hesitation up here near the highs. Looking at the Russell here, obviously we're up, about 1%, a little bit over 1% there today. We'll look at all the indexes, look at the price action as we're heading into through the rest of the week. Some interesting company news out of Google, some upgrades out of Micron. And yes, we have Coach Emily here today as well to take a look at a potential covered call trade that she's thinking about later in the show. And I've got some stocks I'm interested in from this weekend's options report that we'll take a peek at as well. Let's get right down to all of those things and start the show here by bringing Matt in first, as always. Matt, how you doing today, sir?
Tim, doing good. Excited to be here with for the latest edition of the halftime report and to break down the market news today.
Yeah. And Mark, Emily, Cody, we got a full crew here, guys. Cody's running screens. Emily is here as our guest. Emily, I'm going to bring you in here second. And how are you doing, my friend?
I am doing wonderful. How are you guys doing? I'm excited to be here today. It's, New Year's. We're back to a normal schedule with trading. It's fun. I love coming back to a full-fledged, trading week. So it's good to be here.
Getting over those holiday lulls where there's not much going on, getting back at it, revived with some energy and some attitude to go out there and kick some butt, huh? I like it.
Yep.
Yeah. Marky, let's start with you, my friend. We got Georgia election runoffs here today. Mark, what's your thoughts on the market here? First of all, some of the assessment of what you're seeing in the risk, all those kind of things.
Well, listen, I got a lot of reasons to be concerned about market downward movement. I don't think the Georgia elections is one of them. Now, could it serve as a pin to cause a little downward spiral for a day or two? My take on this is really, really simple. And I'm not talking long term, I'm talking about short term. One crew is a powerful force, and those Wall Street analysts will find a reason, no matter what the outcome today, to make it a good thing for the market. So if Democrats win, all of a sudden, all of your Goldman Sachs and your Morgan Stanleys and all of this will rally around this infrastructure spending, stimulus checks coming, all of that. And they'll rally around the fiscal spending side. If the Republicans win one of the Senate, well, we already got the market reaction from that in November when you saw not only the election risk subside, but a divided government. They found a way to spin that it meant no corporate tax cuts, blah, blah, blah. So, I really think that, could there be a short-term reaction? Of course. The market's on edge right now a little bit, right? It feels a little bit on edge. So could there be a short-term sell-off after the results? Sure. But I really think there will be a rallying new narrative form around whatever the outcome is.
Maddie, I got a grumpy dog over here barking at the repairman. So I'm going to bring you in here next because I know we've had a long conversation about this over the last several days. And I know that you've got a take on this. We've got an election here. It's in the consciousness politically. It's in the consciousness, in the conversation of what people are talking about today. But what are the market implications, Matt? Let's start with that.
Number one, I do think as market participants, we're mixing some of our political belief system with some of our market analysis. And that line is a very tough line to navigate sometimes. We all have our belief systems politically. We all have our hopes, wants, and dreams. But a lot of times we think the worst of the other side of the equation when the reality is somewhere in the middle. I look at this very, very simple, Tim, and Mark's absolutely right. This is what Wall Street does. Wall Street is going to paint the rosy picture regardless of the scenario we're faced with moving forward. So just to keep everybody up to date on kind of what is happening here today, we are, as a nation, we are having our runoffs with the Senate in Georgia. That was, and for those of you that are not familiar with that, if a Senate candidate does not get above 50% in the Georgia Senate race, they have their state constitution basically allows to have a runoff, and that is what we are going through. And no candidate on either side got 50% of the vote coming into in November, which means we're having a runoff here today. Why it's important is currently Democrats have 48 seats, Republicans have 50 seats. At 50-50, if the Democrats do win both seats, they have a 50-50 tiebreaker scenario where the Vice President of the United States will basically, be the presiding individual in the Senate. The Senate would have a majority as Democrats. If Republicans win, they would have 52 votes at that point and really kind of maintain their voting supremacy there in the Senate. Now, why that's important is we're talking about a president's first term agenda here. And if the Dems do win, this is what's at stake. And again, whether you agree or disagree with it politically is a different conversation. We're talking about the markets here. If the Dems win, you're really talking about, number one, control of the Senate, which will most likely mean $2,000 stimulus checks. They've been all over that the last couple of weeks, really kind of you could say buying votes a little bit. Hey, we win, we're giving you $2,000 stimulus checks out there. But that most likely will happen. I fully expect more fiscal stimulus to happen in 2021. I feel like what they did a week ago and what's going to be going into law fairly soon was just a stepping stone into all of the stimulus that's going to be happening this year. And so $2,000 stimulus checks are on the table here in Georgia today. I also think you do have political tailwinds on distribution. I think distribution as of right now of the vaccine, right now we're at about 4 million vaccinated in America. Our target coming into the first of the year was 20 million. There are some concerns in distribution. And so I do think, with, and I would have this same thought process, whether it was Republicans or Democrats, but with control of each branch of government, it probably does give a little bit of distribution of the vaccine, a little bit of tailwind instead of a headwind there. Just a minor issue more than anything. And then obviously infrastructure. I do think, I felt like one of the winning points during the Trump administration was infrastructure. I thought Trump could have got it done. Trump decided to go through the corporate tax cuts first before infrastructure. And then honestly, when we were probably going to transition as a nation to discussing infrastructure, we were talking about impeachment. And so I do think infrastructure is one of those things that was on the political agenda for the last few years, but because of certain political situations kind of took the nation's attention and the political attention, it got shelved and put on the bookshelf to a certain extent. I do think infrastructure is in play here. And especially if one party has control of government, I certainly believe you have a higher probability of getting infrastructure through. That is a market bullish argument, in my opinion. The market has celebrated stimulus every single time not over the last year, but over the last really truly over the last 10, 12 years, the market has celebrated stimulus on stimulus. The market would also absolutely celebrate an infrastructure plan that is 100% needed. If Republicans win, you're really talking again control of the Senate. You're talking, and politically, if this is important to you, you're putting a stop to that agenda. You're putting a stop to that Biden agenda. And it's going to be very difficult to get anything through Congress with Mitch McConnell, making the choice of what bills go up for a vote and what bills do not go up for a vote. So it's really, and some people, myself included, many, many, many times, like a do nothing Congress so that they don't mess with our lives to a certain extent, but that's more politically. And so I do think Wall Street is kind of struggling with how to market this right now. Like how does the market respond in this scenario versus this scenario? I think it's a little bit difficult, and I think it's a little bit premature right now. I think Mark's absolutely right though. If the Republicans win today, I think that the message from Wall Street is going to shift to the same message that was post-election. You know what? We're most likely still going to get stimulus. We're most likely still going to get maybe some conversation on infrastructure, but what you're not going to get is an elimination of the corporate tax structure that was a boon for the market in 2017 and has been a boon for corporate revenues as well over the last 3 to 4 years. And so if Republicans win, obviously that's off the table, cutting that. But here's my personal belief. Presidents only have the ability to really get one or two things done in their first 4 years. And I'm talking big things. I'm not talking executive orders. I'm not talking these minor things that happen at the government level. I'm talking major macro issues. And I just don't think it is political. It's a political winning argument to go after taxes right now. Not in everything we're dealing with, not in everything that we have in front of us that we need to fix, both from a distribution of the vaccine, both from a stimulus perspective. I just don't see that on the agenda in the next few years. So I think you're really going to paint a bullish argument one way or the other. It's just a matter of which one's more bullish, in my opinion. And quite frankly, an infrastructure argument with $2,000 stimulus checks, which would approach around $700 billion in stimulus, we all know the market would respond to that.
Yeah, I mean, those would be incredibly bullish themes, Mark, if you think about it. I mean, and I've put a lot of time thinking about the implications of whatever's happening in the market, because it affects my accounts, affects the messaging here. Obviously, this is something we talk about internally a lot. Matt, I think you're on point here, and I'm trying the best I can. In fact, the first question I had for Matt this morning was, find me the risk here, and I can't find it yet. Maybe there's something there that I'm not seeing, Matt. I don't know.
Well, no, listen, regardless of whether Republicans or Democrats win the Senate here today, and shockingly, if we got a split, that would be actually kind of funny if we got a split. But, in terms of whatever happens today, I have bigger macro concerns than I do short-term concerns.
Mm-hmm. Mm-hmm. About the themes that it may develop into what is happening in the
economy.
Oh,
yeah. If you give $2,000 to every single human being in America, I have massive inflationary concerns.
Mm-hmm.
That will create fairly aggressive velocity of money, which would have an inflationary component, unlike what the Fed has been doing over the last 10 to 12 years, where it has not had an inflationary environment. So yeah, I have macro concerns and I have macro disagreements, but I think there's a lot to be said about what's happening right now today with Georgia runoffs. I think there's more to be said than the actual market cares about.
Mm-hmm, mm-hmm. Speaking about what the market cares about, Cody, we do have a chart up here on the S&P 500. Matt, from a technical perspective, let's have Cody break this down simply first, and let's get everybody's insight on what we're seeing here chart-wise. Cody, what are you seeing in this chart? Obviously, we had a little bit of that volatility yesterday. Matt, you nailed the intraday location, by the way. 3650 came down, pinged it, found some support, ended up stabilizing through the rest of the day. Now, here we are today, kind of with a tiny little bit of a bounce. Cody, what are you seeing in the chart?
On the overall daily chart, not too much. When you said that location that Matt nailed yesterday, that's really more on an intraday chart, because what we saw yesterday in those bounces, those levels, you can see where I drew those lines yesterday. That's exactly what we're still seeing fight today. So we are seeing a little bit of hesitation that the market didn't want to just keep going down, which is what we gave caution to yesterday as well. But we saw those levels hold. We saw 3680 be a major zone that once it got above it and it came back and tested down against it, it did not want to go below that level. But then we also see right around 3,700, it's fighting to decide whether or not it wants to be above that. So right now, from a technical standpoint, it's fighting these intraday levels. When you look at the daily chart, the trend is still that grinding upward bullish, and we're not sure whether or not we're going to have the same snapback that we had, last week. So we have that grinding upward momentum. We have a few things, politically that everyone's, worried about, like what are the market implications of this? So right now I'm seeing this just kind of as a hesitation candle fighting intraday resistance that wants to decide whether it's going to continue with its upward grind, or if it does happen to break below those levels, which thus far we haven't seen that technically. We've actually seen those levels get rejected. So right now I'm seeing a hesitation, do nothing day in the market, and we need another confirmation, whether it be a break of either a level to the upside or a level to the downside, to see whether or not this market's going to continue. With everything that's going on news-wise, I don't see this really happening today. From a technical standpoint, this is all just a neutral. I mean, if I were to even zoom in a little bit further, just on this day, there's like just this ugly wedge type pattern forming since the market opened. And wedges, you never know whether they're going to break up or down.
Mm-hmm.
That's just the nature of a wedge from a technical standpoint.
Mm-hmm.
So whether this breaks, I mean, this could happen in the next hour during the halftime report because it is coming to that point. But where it breaks and where it moves is dependent as to where this market closes today. So from the technicals, we are above that 3,700 mark that we want to see if it can maintain that. If it does break below that, then 3680 has already shown us to be a support level that it's going to have to break through that as well. After that, we have 3660 and then 3600 after that. So there's a lot of support levels below what's happening and not as many resistance levels to the upside. But the greatest one to the upside is going to be that previous high that we had going into last Thursday before we closed for New Year's Day. So not the first resistance that I see technically is going to be 3720. If we can get above 3720, then we have a few others that we need to get through. But 3720 I see as the main point that needs to break above before we can say that this is going to continue that bullish grind. And until we can say that it's going to be a bearish move or even reversal, we need it to break through multiple intraday levels to even see that. Right now, this is kind of like I'm leaning more neutral on the market overall, just because there's no definitive pattern that tells me that it's going to move one way or the other.
I still got a slight bullish call on it, and I think that's kind of what's in the chart. You even called it a little grindy bullish, so I've got that lean on it myself. Matt, anything you want to add to those technicals that Cody just broke down? Good job, by the way, Cody, on that. Appreciate you going through the different levels as well. Matt, anything you want to add to that?
Thank you for breaking that down, Cody. A couple things. Number one, this is what you want to see after a day like yesterday. You want to see that intraday level of support form like we talked about yesterday. When we were breaking down the market sell-off yesterday, when I said, okay, the first test we're going to have is that 3650, that's because that's where support was forming. That's not because that was a major intraday level of support. That's because what we were seeing there is support forming, and then you had a fairly clean trigger above 3670 up to 3690 by 3700. And so, yeah, I mean, that's what you want to see. And then on the daylight today, where you have a lot of market, when you have a lot of potential news that could impact the market, you want to see it consolidate. You want to see it form those multiple levels of intraday support that you can start doing projection analysis off of, and you want to start looking at that resistance level. I do think that 3720 level that Cody identified is a fairly important level. If you can get back above that, anything above 3700, I think you got to be slightly bullish on the intraday. But if you can get above 3720, you should have 20-30 points clear selling to 3740. So I do think you're looking at this as bullish today. I know that most traders are probably updating their watch list coming into the weekend. We took a look at just one of the stocks on yesterday on CME, and if you'll pull up CME very quickly, we broke that down from
XME.
not CME, XME, excuse me, XME. We broke that down and we were talking about, okay, do you see how the sell-off in the intraday just came down and retested that breakout channel? And then you were looking at that potential, a potential trigger going back up above, 3380 is kind of where we identified that level yesterday. Updating that trigger, for traders that understand this, updating that trigger, they looked at a very, very successful trade that is doing really good here early on today. And so this is going to happen in the market. You have your weekly routine and you plan it, and then the market opens up and it kind of goes to junk a little bit, and you got to reassess the situation. Yesterday we got punched. It's a matter of reassessing the situation, right? You don't cower and say, oh my goodness, one down day failed trigger and I'm done. Sounds like my 11-year-old playing Among Us last night. No, you reset the situation and you reassess the technicals, and on XME, perfect. Same thing on the market. It's no different. You assess the damage and then you reassess where those potential triggers would be.
Mm-hmm.
I love the fact how nicely this played today with that trigger, which would, depending on where it was set, would be right around there, and it nicely hit. And then if you miss this one, well, you got another one right here that you could have played. This is that initial break trigger that we talked about. If you were playing that point, that resistance level that we were talking about yesterday, and then if you missed it, it gave you another opportunity to get back in if you missed this one, confirmation, and now look what it's doing. And as I'm speaking, it's breaking above the next level to the upside. So there's another trigger, but it has run all the way up into that. So I want to see this cool down, but this is very clean based on technicals to get into this particular pattern.
And I do share some of Mark's macro concerns, absolutely. But wake me up when the market actually breaks a support level. Just one.
Yeah.
That is not an intraday support level.
Yeah, and quite frankly, it's had a couple of days in the last 2 weeks that it could have had some volatility continue, and it didn't. It took it right on the chin on those 2 Mondays, yesterday included, found and stuck some support and came back up. I love the technical breakdown. And that XME analysis yesterday, I think probably ended up making some people some money. I thought it was excellent, and really, especially going to the intraday, very important. Emily, did you take that trade
Tim,
on
if
XME?
you don't break support, I mean,
Look at
you
this
kind of
now.
got to think that's just kind of the business of trading.
Emily?
No, I did not take the
Ah,
trade.
you
Actually.
missed it.
I missed the halftime report because I was coaching a student, but we were talking about the same exact scenario where if you miss, if you got triggered in and got stopped out from yesterday's movement, or you always reassess the trade. And the concern that a lot of students have is that they keep adding onto their watch list. And we were talking about this, and I said to him, I said, you have a watch list that you're watching and watching and watching, and you've got all these things going on. And you sometimes have to reassess your initial entry point. When you have a down day like yesterday, you might have to readjust that entry point because you probably even have a better entry point than what you did before. So
I'm dealing with the same thing with Apple right now. In
right?
fact, I was asking Matt today, about Apple Computer. Yeah. Go ahead.
Real quick before we get on to Apple, is the only way you could have missed, let's say, if you got triggered into this, then you got triggered in based on, it being above the market order. But I actually think that it would have possibly jumped your market order because it gapped up. And being stopped out of this would be a little confusing to me, because if I was getting into this trade, my stop would be, down here or below, candle there, which it never got close to.
Yeah.
So my
I
question
wasn't
is,
talking about this particular stock this one in particular. I was just talking about in general. They were going through some some trades that they got triggered in, and then the market came down, and whatever. So but we were just talking about in general. If you miss the setup, if the setup it's not there, then you can always reassess your watch list and see whether you even get a better entry trigger.
Yeah,
absolutely, all the time.
That happened with XME yesterday. So absolutely good thought. Let's keep talking here. By the way, some of the macro concerns, Matt, you did reference, I still am having regarding obviously the coronavirus rollout of the vaccine, those type of things. Mark, I wanted to get your take on just COVID right now. I saw that in England, Boris Johnson says they're going to go into another lockdown. In Germany, they're talking about partial lockdowns with Angela Merkel. What is your current read on the state of COVID right now?
I mean, the thing about it is yesterday when I always love more of a hobby than anything serious. What were the causality headlines out of the financial media? Because during the day, people are like, why is it selling off? Why is it selling off? Market Watch attributed it all to COVID. And once again, you can agree or disagree or whatever. I'm just saying what they did. Seeking Alpha attributed to both the Georgia Senate and COVID. With lockdown spin in there. So, it's hard to give it a lot of credence because the data on COVID has been terrible for a while. The lockdowns in Great Britain weren't exactly breaking news yesterday, but this mutant strain of the virus, Great Britain is taken very serious. Listen, we know a lot of governments around the world are going to have very what's the right word? Cautionary measures with their lockdowns to contain the virus until the vaccine can get fully distributed. That's not breaking news yesterday. So, it's hard for me to give any credence that the market sell off other than just, maybe a little bit. But I see COVID right now more as an anchor, preventing stocks from going up to that next level than I see it as any bearish catalyst. Like something really would have to happen. Yes, hospitalizations up, cases are up, deaths are up, lockdowns are happening. I mean, we know the big picture, but in that forward looking, the market's still very resolute that the vaccine will successfully get distributed, that we will return to a sense of normalcy. That's still the market's main belief. So until that gets shattered, and the only thing I can see that can get that shattered would be perhaps like some evidence that the new mutant strain or something is resistance to the vaccine or some problem with the vaccine. And we haven't seen anything even sniffing that. So yes, COVID is terrible right now. Vaccine will get distributed. I see it as more of an anchoring, like just holding price back, than I see it as a potential bearish catalyst.
Yeah, thanks for the analysis on that. I agree with that. By the way, there's not much in the other indexes today. The Dow, the NASDAQ, the Russell, they're all looking very, very similar. If anybody has seen something specific in those indexes they want to go to, that's fine. We can do it. But I'm not seeing much there. I think we can go right into commodities here. Let's do crude oil next if we can. Crude light actually, took it on the chin yesterday as well, but now it's starting to run a little bit. And we can take, I got you, Cody. Yeah, and we'll take a look at those in just a minute. The crude chart here, guys, though, is heating up a little bit here. Looking at this $50 level for a potential breakout. Mark, I'm reading a lot of speculation and chatter out of these OPEC meetings that are happening virtually, obviously with, Saudi Arabia and China, or not China, but Russia, talking about these production numbers in February, whether they're going to keep them or not. I didn't see any clarity on that, but what's going on with oil here? Because
well, and the thing about oil today that was interesting, once again, the Saudis have your back again. It was a very favorable, because once again, oil is all about supply and demand, right? We know demand is curtailed right now. And, as long as oil traders don't feel that there is going to be a resurgence of supply, they can be a little forward thinking, in the reopening eventually happening. And the deal struck between Russia and Saudi Arabia was very favorable. And I think it caught me by surprise. I think it caught the market by surprise as well on how favorable it was, which is why you're seeing such dramatic. I mean, that's a big candle, right? You don't get candles like that to the bullish side very often. And, and the basic deal is Saudi Arabia saying that they're willing to cut a little bit on their end, give Russia. It was this nice, like, hey, let's get along. Russia will give you what you want. We'll cut a little bit on our end to help the big picture of things. So Saudi Arabia really playing ball with Russia there. We've come a long way in the last 9 months in Saudi Arabia, Russia, when they tried to do their 6-week oil price war. Caught the market a little by surprise on how favorable it was. And I think you're seeing that in the price right now.
Matt, $50, in my opinion, is tradable. Whether somebody takes it or not, that's up to discretion. But I do think there's potentially a trade in here. What do you think technically on oil here? Is this heating up a little bit on that candle?
Yeah, it is absolutely heating up on that candle. The weekly chart is also consolidating over in the last 3 to 4 weeks, looking at some punch back up into that 53, 54 range. I could definitely understand somebody taking a trade on oil above $50, given the fact that you have consolidated enough on that. You got to like the weekly chart here, but really kind of that daily chart. You've really been consolidating over the last 2 weeks on that, and you've had fade action very similar to the marketplace over the last 3 to 4 weeks. A breakout above 49.40 would be a confirmation. $50 obviously being that significant number, but really the breakout on confirmation is 49.50. That's your technical breakout. And honestly, if you'll look on the daily chart and you go back to January, February of this year, you'll see that slightly south of $50, 49.50, 49.40 type level. You're breaking out of that. So absolutely, you have confirmation here. Even underneath $50, you have confirmation from a technical perspective. 50 just being that significant whole number. It's a no sell day so far on crude. I think the best way to approach crude, if you're looking at it from a directional perspective, because quite frankly, not a lot of people caught the candle. You were underneath the breakout channel. The candle started picking up momentum pre-market. Not a lot of people caught that candle. I think the best way to kind of look at crude oil right now is to look at it from a 30-minute chart perspective. Let's see how crude oil navigates on that intraday time frame between 49.50 and really that 50 level. And if you can get some degree of short-term consolidation on the intraday, you could do a fairly aggressive trigger above $50. For me, crude to stay away. I just think there's better tradable instruments, quite frankly, than crude oil. And it's also a very difficult tradable instrument to get a macro projection on, quite frankly. And so it's a stay away for me, but the analysis is on, right? You do have a no sell day candle on a big candle that's completely engulfing the previous day's candle on a breakout. It's on. You're most likely going to see price appreciation in the 53 to 54 range. It's just a matter of how you play. And I'm sure cash flow traders are probably licking their chops on bull put spreads here.
Yeah, bull put spreads on the direct product, or even energy stocks if you've got your favorite
Energy
stuff like
stocks,
that.
naked puts, energy
Yeah,
stocks,
yeah.
maybe USO. Not my cup of tea, but I think for me the best way to
I
play
mean, what
this
I
on this
did,
breakout is bull puts on crude.
what I did is, listen, I mean, I'm a wuss when it comes to oil these days. I go to my midstream companies. When I saw the news, when I saw the price movement, you have a lot of midstream companies in, consolidation patterns or levels where you can sell naked puts at lower levels. That's what I did, a wussy lunch money thing. But, hey, every dollar spends, right?
Yeah, trade
Give
your
me
system.
give me one.
Always.
Give me one, Mark.
WMB. Nice consolidation pattern, pretty clear level of support. You're getting upward movement on it.
WMB or WNB?
Williams companies. No, that's right.
Yeah, you're on the right
Okay.
one.
Williams company. I mean, you got a 6-month consolidation pattern. They pay a really good dividend. They're one of my favorite midstream companies. So sell that naked put, above support level. I mean, once again, wussy play, but it's a stock and a company that'd be more than happy to own. Another one you can look at is EPD. EPD, might be hearing a little bit more about this company later today. Spoiler alert, not going to do it. I'm tempted to, but, nice consolidation, selling them back into the consolidation. I think, the midstream plays for dividend players, really nice conservative ways to make a few bucks on oil without having to, all of the hoopla, about where's oil going to go. They benefit from upward movement. So I like both of those situations.
That WMB is a mark chart if I ever saw one in my life. I'll tell you that. Long consolidation, a little bit of a deeper retracement, sticking some support near moving averages and upward
And
movement
then
of
you get
price.
upward movement, yep. So yeah.
That's a mark chart. There's no doubt about it. Let's take a look at some of the metals. By the way, gold had a big day yesterday. Today, some of the other metals are playing catch up. Palladium, platinum, copper, all having nice days today. Matt, really healthy response out of gold, second day in a row. Obviously not the same percentage performance, but you don't necessarily need that as a trend is starting to develop. What's your read on gold here as we're hesitating at this 1950 zone?
Well, I mean, you want to see the continuation here, especially in the backdrop of what happened last time we broke out of that 50-day moving average. Not the same technical pattern coming into this one, but the last time we had that trigger, we saw that big upward moment the same way we did yesterday on the breakout of 1900. You saw that big breakout of that of the 50-day moving average, had the all the momentum in the world, and then just stuck. Had that doji, came right back down and basically violated support in all capacities. So you want to see the consolidation. You want to see the strength. What I don't want to see is 5 more bars that are the exact same as yesterday. And I know that's weird. But I don't want gold to be a speculation trade. And so in terms of
You don't
gold
want
here,
this right here. You don't want this movement.
no, I know I want some stability in the gold markets, but you do like the overall. Well, let me put it like this: people have been wondering. When I mean people, I mean gold people. People have been wondering for 12 straight years why gold has not performed better, and it's performed okay, but why has gold not performed better in the face of what the Fed has done from a monetary perspective? And I've been screaming at people for 10 straight years about how inflation really works. And it really works not because of just how much money you print, but where that money goes and how much utilization that money has through an economic system. Well, guys, if you look at the stimulus and we did in 08 and 09, we were approaching $2 trillion, and over 95% of that money went directly to corporations, went directly to institutions, went directly to the banks. A very, very, very small percentage of that money went to the consumer base. And it is the consumer base that actually likes to spend the money and utilize the money and create velocity of money. And that means the dollar has more economic value than just printing the dollar does. Whereas what you're looking at last year, right, you look at $3 trillion in stimulus, taking into account the direct stimulus checks, taking into account PPP loans, which people don't understand PPP loans. It's very simple. Thousands upon thousands upon thousands of people in America, if not millions, have a job because of PPP loans.
Mm-hmm.
What that means is that money coming into the market is actually going to consumers through economic activity, which means the consumers end up using the money, which means it will have a bigger velocity of money than what we did in '08 and '09. So if you take into account direct stimulus checks, if you take into account, PPP loans, you're talking north of $1.5 trillion that has went direct to consumers in 2020 versus the token, pennies they got in 2008 and 2009. That is one of the reasons why you are starting to see concern from some Wall Street institutions, and quite frankly, concern for myself regarding inflation, is because we're printing more money today than we ever have. We're going into more debt today than we ever have. And a lot of the money that we're injecting into society is going directly to consumers' hands, which will create a higher velocity of the utilization of that money. And so you're most likely going to see a higher impact on inflation in the future than one you have done on the past. And, if the Democrats do win the Senate here, guys, you should own gold. But if the Democrats lose the Senate, you should own gold, because over the course of the last 10 years, this isn't a political issue. It's not. Both parties spend and stimulate with money. They both apply Keynesian economic philosophy. And so it's a thing about whether or not you want to protect your money. And if you want to truly protect your money, if you truly want to protect your wealth, the number one way to do that for thousands upon thousands of years is gold. Whether or not you agree with it or not, it doesn't change the 6,000 years of history. And so that's one of the macro reasons why you're seeing this type of movement on gold. But that's been moving ever since the 200-day moving average. I'm just laying out my personal belief to a certain extent. But I love gold here, and I think gold absolutely needs to be in everybody's portfolio.
Yeah,
and quite frankly, my year-end projection of 2450 might be light if the Dems do win the Senate, and if we do start seeing that massive injection of money into society.
Hey, let's what do you guys think about miners? They look cheap. We pull up GOLD, Cody.
Well, Barrick,
I like the little short-term support, like a lot, that was formed, getting a little pullback today after a really nice day. I love that support level. Miners look cheap to where gold's at. I mean, talk me out of a February 23 put.
it depends on what you're trying to do here. If you're trying to go for price appreciation, I wouldn't do Barrick. If you're trying to go for price appreciation, quite frankly, I would look at AU, or I'd look at Newmont Mining.
Or that XME chart, the one we talked about yesterday.
Or the metals mining ETF, right?
Well, the metals mining only has a small percentage allocated.
Yeah, that's not gold. Like, that's not specific.
It's very small,
gold, right? But specifically at gold, Mark, if I was looking for price appreciation, there are three charts I would personally look at right now. That's Newmont Mining, GDX, the direct ETF for the gold miners, and AU. Okay, all three of those are outperforming Barrick Gold and trading similar to what, maybe not as good as directly gold. Now, if you want a gold, GLD is the play there. If you're looking at cash flow systems, Mark, if you're looking to sell a naked put on gold, kind of like if I was specifically advising you, I would say I like the reversal pattern in Barrick Gold, and I like the fundamentals, and I like the liquidity a little bit more in Barrick Gold. I think Barrick Gold is a little bit better for cash flow systems. So if you're looking at growth, I'd be looking at directed GDX, AU, Newmont Mining. If you're looking at cash flow, you can do fine with all of them, but I do like Barrick Gold for that environment.
Yeah, I like that February 23 on Barrick a lot.
February 23, 45 days out.
That's aggressive.
That's an aggressive delta for you.
Yeah, that's like,
I
want to
very
own this.
aggressive. You want to own.
Yeah, no, I like that a lot. I mean, I like it a lot.
It's tough because you got 23, you got 22. 22's under that support that you love, Mark. 23 gets that support at 22.30 to fight for you, which you want 22.30 to fight for you. So if you're looking at if you're riding to own, I do like that aggressive 23
Yeah.
strike price. If
Yeah,
you're
no, I
riding
mean,
to
Barrick
own,
Gold, like I don't own any Barrick Gold. I mean, you know, right now, I'm a little light on miners for where I'd like to be. Is a company
if you're
like if
riding to
gold were
own,
to,
23 makes sense.
if
Now,
it's the easiest company in the world. If it were to drop to 17, I'd be like, oh, let me buy some more. Like it's just
I
one of
think
those companies.
it sounds like he wants to own it, so he's
I do
willing to
want to own it.
get paid to own it. That's what it sounds like.
I get that. And that's what I'm saying. If you're riding to own, you're looking at that 2230 support level and you're saying, what is the strike price above 2230? That's what you're doing. If
Yeah.
you're riding to cash flow, you're looking at that 2230 level of support and you're riding underneath that 2230 level of support because you don't want to get put the stock. You want support to fight for you in both capacities. And so if you're looking at riding to cash flow, I would probably start with the 21 strike on Barrick, Mark. If you're riding to own, that 23 stands out.
I mean, the only question I have, because we know things can be, would you wait till after the election to do it? I mean, that's the only question in my head.
Well, after the election, I promise you, we're going to be talking about the circus going on January 6th. I mean, here's the thing: after the election tonight, we're going to be talking about the next political story. There's always going to be a reason to stop you from doing something you need to do. So why don't
Fair
you
enough.
just do it?
Just do it, as Nike says. Like
I don't
it.
know what that voice was, but I like it. I think that could.
Listen, you're about to hear another
I-
voice here in a second.
I like the analysis here on gold and the difference between
Especially
wanting to
on
own and
gold,
wanting to
though, with
cash
the
flow is
political
helpful.
uncertainty. Mark, regardless of the political uncertainty, don't we both, whether Democrats or Republicans win, don't we both like gold?
Yes, sir.
Okay, right.
Yep. Marky, why are the other metals heating up here today? Platinum up 4%, copper up 2.5%, looking for a breakout.
Well, I mean, they've been hot
Palladium.
for a while, right? So,
Yep.
I mean, this isn't a 1 or 2 day thing. I mean, there could be some front running of a potential Democratic win going on here. Maybe because one of the things that one of the big beliefs is that, hey, Dems win, that is going to
Infrastructure.
be infrastructure bill. You know, that's almost a lock, right? And so there could be some front running here. That's my best guess. But they've been running for a while, right? They've been running for a while. So, and then take a little bit of time off. Like you go back at that XME chart, which is a diversified group of aluminum and copper and gold and this and that. You know, you took a couple of weeks off, right? Nice run, you know, after Pfizer vaccine, take a few weeks off, breakout. I mean, we saw that with FCX, take a few weeks off, breakout. It's hot. So I think it's a combination of front running and technicals right now.
Yeah, there's a
You
lot of
beat me
really
to it, but I was going to
impressive
say
charts.
this is why you should follow these scouting reports, because we've been pounding the table on FCX, and I love the movement we're getting.
Yeah, had a nice little
Mark
move
beat me to
breakout.
it. Is FCX is definitely
FCX.
showing. This is diversified in multiple metals, mainly copper and gold. And as we see both copper and gold moving, we're seeing FCX move. It was a clean, easy trigger.
Yeah, I do think you have a combination of two things happening. Number one, a Dem win would increase the odds of increase the probability of an infrastructure plan. There's literally no doubt about that. And so with that infrastructure, I mean, you got to be talking metals moving in that. So I do think there's a little bit of a macro theme starting to build in the metals, specifically platinum, silver, palladium. But you're also seeing some technical criterias that are setting up as well. You know, platinum, you know, fighting above $1,000, reclaiming that, showing a breakout of that. Look at a weekly chart on platinum very quickly. You're going to start to see that technically it's starting to set up for that run into that 1300 that we talked about. You know, you look at silver, and you know, we love the breakout of 26. I love the breakout of 26. I like the breakout of 27 on silver. I think that's pretty clean and pretty legit. Had a couple days of consolidation coming into that. When you're looking at palladium, you know, palladium has been stuck in the mud for really the last 4, 5, 6 months between 2200 and 2500. Really hasn't done much of anything. You look at that on a 3-year weekly chart, and it's just kind of stuck. But you start seeing, okay, if we close above 2500, what's stopping palladium from testing those all-time highs at 2780 that we saw at the end of the trade war in 2019, coming into the pandemic of 2020? So I think technically you're setting up, but I do think specifically on platinum and silver, you do have a little bit of the added infrastructure type argument going on. Gold is a pure inflationary argument right now.
Yeah, absolutely. And you got to love the action
Yeah,
there.
and Spencer, I agree with that. FCX has been a monster. Every breakout has been legit on FCX. When you're looking at copper specifically, we saw that breakout of FCX just a couple days ago last week, and it just ran and ran and ran, and we talked about aggressively managing that position because copper had not really kind of ran with FCX. Well, copper finally decides, well, is FCX going to come down or is copper going to catch up? Copper decides to catch up. FCX is also one of the only stocks that was at a high price this year that I also kept I kept on dirty sexy money. And so even though FCX has been a monster lately and has been a monster for the past year, I don't think that monster is done, in my opinion. And even if we do see some short-term consolidation or pain in FCX, I feel like the liquidity in the options market allows you to aggressively write covered calls against it without buying put options to offset some of that risk to the downside as well. And so I like FCX in the short term. I definitely like it as a cash flow strategy this year as well.
The dollar continues to get beat up here, guys, and Bitcoin continues to run. Let's take a quick look at those. And I do want to get into some stock talk here in a minute. There's a few news items I want to get to. Emily has a trade idea I want to analyze. There's a couple of charts I want Matt to help me with as well, including the Apple one I saw you guys chatting about in the chat earlier. Cody, give me a quick read on this dollar. What are you seeing technically? Anything grabbing your attention from a Forex perspective?
I can give you more of a read in the fact that as soon as you mentioned the dollar, Mark stood up and walked away. That's more interesting than what the dollar's doing.
There's not much here, and Mark must need his snack time. So
that's what it is. But
he gets grumpy if he doesn't get his snack. So
the dollar's doing its bearish thing that it's been doing for quite some time. I mean, I don't know how long ago I drew this line here, but the line is still holding, and until it breaks that, then I'm not changing my opinion. We're bearish on the dollar. As far as overall setups in the currency market, you wait for the clean triggers and then you take them, just like any other market.
And then volatility continues in the Bitcoin market. If you take a look at the BTC chart as well, obviously there's not a trade here. We talked about that. There's just back and forth and crazy volatility hour by hour by hour. We're literally seeing this thing bouncing around. Cody, just give me a read on this one technically if you can, and make sure you go down to a 30 or an hourly chart when you do that.
How are you going to throw that at me? There's no technical move on this. The technical move was the break here and the break there. There's no technicals here. I mean, we can go intraday if you'd like, but as far as technical, we're seeing just it move. So it had that gap up, which I know in the normal Coinbase, it moves over the weekend, whereas in the futures, it doesn't. So this looks like a gap in the futures market where we had that run up. So now from an intraday point, which is the best I can do, is that level right about 33,000. We're seeing that that's not line, it's a circle. Is we saw that it's breaking intraday back above that 33,000, moving up. It does have that resistance at 34,000 that if it needs to get through to continue along this crazy, ridiculous parabolic pattern. But as far as a new trade for anyone to get into short of day trading Bitcoin, I don't see anything here that's a tradable signal.
Mark, any thoughts on Bitcoin, crypto in general? I mean, this has been quite an interesting week in that regard.
I mean, I have my own strategy I do with the miners, the Riot and the Maras of the world. And once again, like when I get a technical patterns that I believe in, I hit them. On Bitcoin, I don't do the technical patterns on those. I do the technical pattern on Bitcoin. But Cody's right. I mean, listen, eventually another technical pattern that is in the realm of reasonable will appear, but right now we're in a parabolic move. Makes it really tough. Yeah. But I will note that JP Morgan came out with their long-term target on Bitcoin at 146,000. So.
Okay.
I wonder what Fibonacci projection they used to get that one.
Wait, 146,000. God,
I just found it interesting because it just was a few years ago. Jamie Dimon wouldn't even let the people at JP Morgan even trade Bitcoin, and now they're saying 146,000.
Oh, there's not a lot of consistency out of these Wall Street firms. I'm going to tell you that right now. They've turned the corner on Bitcoin. They're all embracing it. And these crazy upside projections, I don't think
They're
are
doing the
helpful.
exact same thing they did on tech last year, guys. They upped the ante every time it met a target at some other bank.
No,
Yeah.
and if for
That's the only thing
whatever
that's
reason it
happening.
had 146,000, they'd up it to 532 based on no new information, right? They love to hike targets.
Listen, I'm cheering on the Bitcoin crowd, but there's been zero trade worthy of any degree of analysis literally since 24,000.
Yeah. Just a popcorn chart
So,
at this point. Watch it, and it's interesting. No
yeah,
question.
cheer them on.
Yeah, yeah.
I like that popcorn chart.
We're anti central bank. Cheer them on.
Is that the first time? I think that is the first time I've ever heard you use the phrase popcorn chart. I really like that.
It just came off the tongue, right?
Yeah, I do. I like it. It's a popcorn chart.
chart.
Just sit back, watch, enjoy the show. You know,
Yep, it's a show. All right, guys. Speaking of some interesting charts as well that might we're gonna take a look at and go through. We're gonna move into stock talk next. If you're still watching our show, appreciate you guys out there. Hashtag Team Tackle. Chat's been great here today. I love the back and forth, the engagement you guys have had with Coach Matt. Fantastic. Love seeing the energy there. By the way, if you've not yet done it, give me that thumbs up. Let's help the analytics get out. Support the show. It's a way for you guys to help us with that, and we really do appreciate it. And my new members, make sure you subscribe, click the bell. Let's talk companies. Actually, let's go through a couple of news items. Then we got a couple of trade setups I want to discuss. Google first. And Matt, this is an interesting one. You know, Silicon Valley firms aren't famous for having unions, you know, and yet the Alphabet workers are now starting to discuss unions and forming a union and all that kind of stuff. Only a few hundred employees, you know, at Google at this point, but you never know what that can develop into. Matt, what is your read on this story with just some of the Google employees starting to unionize in the face of, you know, some of their concerns?
Google has over 100,000 employees.
Mm-hmm.
I kind of feel like this is an episode of The Office where the warehouse wanted to unionize.
I can't remember that one.
Oh, they wanted to unionize, and then the lady comes down.
Right?
Yeah, Daryl wants to unionize, and then Michael Scott tries to unionize, and the woman comes down and says, "You can unionize. You won't have a job."
Yeah, she basically was like, Michael, you realize that if you support a union, you're all going to get fired.
Listen,
That's what she said.
Tell me, wake me up. Like literally, has there ever been a company with over, say, 50 employees that somebody in the company has not talked about unionizing at some point because of their mistreatment?
Of course.
Has there
Absolutely.
ever been a company with over 50 people not have that?
in fact,
Well-
I'm on a union break at Tackle Trading right now.
See, Mark's on a union break.
Is that a
Mark,
SpaghettiOs break?
I'll give you the same conversation that Davey Day Trader gave to his employees when they threatened to unionize.
Yeah. Now, out of Google's mouth, they're saying we support our employees
Of course
and
they're
their
gonna
rights
say
to
that.
do that and all those kind of things. We protect labor.
And in the
all of those
boardroom, they're
things.
laughing at them.
They're like, these 200 people, what are they doing?
They formed a secret union of 100 people out of a company that's worth over $1.5 trillion that has 100,000 employees. This is a story today.
More interesting than news, in my opinion, is this chart, though, because I did see a potential head and
Now.
shoulders. Now
I'm interested.
yeah, tell me what you're seeing.
See,
here.
I just wanted you to bring the union news so I can talk about the potential reversal pattern due to the union news. And that's about as correlated as any CNBC headline as well. So in terms of this, what I wanted to talk about with Google today was not so much their unionizing, but what formation is forming on this company. What we're looking at on Google is a traditional head and shoulders formation where the left shoulder establishes a higher level of resistance. The head slows momentum from a trend perspective, forming a higher high. However, you do have less momentum. And then the right shoulder forms a right shoulder fairly similar to the left shoulder. What we call this is a head and shoulders formation. And so when you're looking at a head and shoulders, there's obviously no trade here, but what you're looking for is you're looking for what's called the neckline. And what the neckline is it's the historical support level, whether that is vertical or horizontal. In this capacity, it is a horizontal, which I like a little bit more than vertical ones. But in terms of the horizontal level of support, you have a very clear level of support right there at 1700 that happened on a gap up after a positive response to an earnings report. What that means is if you're an investor in Google and it violates 1700, that would be that traditional scenario where you would look to protect your investment to the downside by either writing calls against it, buying put options, something along those lines. Bearish traders, if there's any left of us out there, bearish traders would look at a scenario like this and say, okay, if we get a close underneath 1700, we're looking to trigger to the downside. I just wanted to bring up Google and look at that very, very, very traditional, sexy head and shoulders formation that is forming on Google right now.
Mm-hmm. Yeah, and that's significant support having very clear line in the sand around this 1700 zone. I think is a good trigger if you can get it. I think there is a speculative trade potentially in there. I got a bigger question for you, Matt. Do you think we're going to get bearish trades and setups in the next quarter? We didn't get a lot.
I think bear trades. I listen. The last 8 months of 2020 was a nasty environment for the bears. There is no doubt about that. Bears went into hibernation, got made fun of constantly. They even nailed their 36% correction and still got made fun of the entire year. That's how much Bears got publicly shamed last year, to the point where they don't even dare talking in public spaces at this point. But I do believe 2020 will bring back some bears. No doubt about that. I think volatility is here. And I do think the euphoria of all the stimulus that we saw in the last 6 months of last year is kind of worn off. And quite frankly, it's like a drug addict, guys. The market's very used to getting their money. They need to get a lot more money to get that same high. They're not going to get it. So I do think bears come back a little bit, but obviously I have a bullish projection on the market for the year. I have a bullish projection on the market right now. So bulls will win. There's no doubt, but bears will have a few days.
Mm-hmm, mm-hmm. From one mega tech giant to another one, Alibaba, next news item I did want to talk about. There was some speculation.
Jack Ma's not dead.
Yeah.
I had to break it. I had to break it. Jack Ma's found.
Jack Ma is found.
Jack Ma's not dead. That's why Alibaba, even though Jack Ma resigned, that's why Alibaba's up 5%. Again, I'm doing CNBC's job for them.
Was there
Alibaba up
that...
5% when Jack Ma is found not to be killed by the Chinese government.
Wait, was there a rumor that he was?
There was rumors over the last couple of days that Jack Ma was
sent to
missing.
the gulags.
Missing. We didn't know.
Missing.
They just basically hadn't seen or heard from him in months. And
Jack Ma gave a speech in October of last year where he was highly critical of regulations on Chinese banks. And in November of that year, Jack Ma was brought to Shanghai to have a very, very stiff conversation about what he can say. But Jack Ma was therefore told to sit in his
Matt,
apartment.
the Chinese are bugging your audio because you're about to say something
That's right.
bad good about Jack Ma.
You think I fear the Chinese? I don't fear the
they're messing
Sods.
with
You
your
think I fear
headset
the
right
Chinese?
now, bro.
They're sending a virus to your headset, and it is squeaking.
Is
really
it
loud.
the China virus?
Well, Logitech
it is China virus 2.0.
Yeah.
Listen, this can spin out of control if we don't get a handle of this.
I agree with this.
I would just say
100%.
Jack Ma, couldn't he afford just to disappear if he wanted to?
He's literally one of the main guys in the Chinese Communist Party. No, he can't just leave. That's not how it works.
No, but obviously
Jack Ma can't just become a Democrat. That's not how it works.
Jack Ma's just laying low. He's not dead.
He got told to be quiet, and he was quiet. And then all of a sudden, people's like, "Where'd Jack Ma go?" And then literally, like, people would be like, "Jack Ma's not dead, guys. We're good."
Right. Yeah, and then only two more. I actually had a couple of downgrade stocks that I did find interesting here today. I want to get you guys' take on it as well. And Mark, I'm going to start with you. Got to on this Micron one. Citigroup gave Micron a double upgrade to buy
whammy
from sell. So moving all the way from a sell rating into a buy rating. They've got earnings here coming up. Obviously a breakout. Micron's one of the stocks, Mark, that you've tracked for years and years and years and years. Do you agree with the upgrade here, Mark?
Micron's a great company. Listen, I've said for years that Micron's one of the best well-run companies in the world. Love their CEO. He's my favorite CEO. He's just all business. He's a great CEO. Micron's a good company. I'm just upset that I'm missing all of this fun. I miss selling puts back in that old range in the 40s.
I am more upset than you are, Mark, because they took my shares from me, and I'm so upset because those were my shares, and I got called out on a call, and I'm just upset because I want them back, and I'm watching it run without me. I got puts on it, but I'm watching it run without
Cody
me.
That when you write a call option, they're not your shares.
They are my shares. and I
Somebody
want
has
them
the
back.
contractual right to buy your shares.
Yeah, I
I'm
lost my
upset.
business. I lost my Disney shares at 92. You know,
I
we can
lost
all
my
cry
Tesla
about
shares
those.
at 40. Are we going to
Yeah,
cry and
I mean, are we
like
gonna have
mourn
the
the
hey? You
Mississippi
know, we
River right
made.
now?
Are we gonna have the we made
I
money
sold
but
I
cry
sold
game?
Bitcoin at 1800. I mean,
Mark,
Back in
Mark, you're
my
the king
day.
of I made money cry game. You are
I
always
know,
like,
and you're not playing it very well. You
I
know,
owned. Wait a second, hold on. I want to play this game real quick. I owned 100 Bitcoin at $180.
Yeah.
yeah, I own Bitcoin at 400.
Mm-mm.
So who wants to continue the game?
Matt
The-
wins.
That's a
I
winner.
owned
Winner,
I owned
winner, chicken
Ethereum
dinner.
at $9, and I had
Huh.
like 400.
Matt still wins.
That's a
Oh,
good
I haven't even brought up my Ethereum yet.
Oh,
I was an early adopter in crypto and then sold in 2017. I win any argument.
okay.
You know-
I will say though, I cannot get upset with my sell of my crypto because for those of you who don't know, the reason I sold all my crypto is it made me a great profit, and then I used it to pay for my honeymoon.
See,
So
all I
crypto
hear
paid for
is
my
that you should
honeymoon.
never get married. That's all I heard there.
Cost you money.
I can't outdo the joke, so we're
Cost
moving
you
on.
Bitcoin.
It is what it is. The other one, actually, I think is interesting because of the heat around this industry here recently, and I completely disagree with this downgrade. First Solar, SLR, and I think Goldman must have an angle here that I'm not either following or I just completely disagree with. Matt, they had a double downgrade on First Solar to sell from buy.
Wait,
just
First Solar is
FSLR.
FSLR. Okay, I missed a letter there.
And after the recent moves into solar, I mean, I might understand neutral based on valuation, or is heated up, or is it price targets, or all that kind of stuff. Come out and put a sell rating on one of the biggest solar stocks out there. I just did not. It was a head scratcher for me. Matt, what is your thought on the double downgrade from Goldman here?
Oh, I'm still on who's the biggest loser of selling price too soon.
Oh, that game could go forever, by the way.
Oh,
And
but doesn't that game teach you a lesson?
it does. Yeah.
And what lesson does that game teach you?
Hold investments and don't overthink them, and don't
Hold
panic.
investments and
Yep.
don't overanalyze short-term volatility.
Yeah, investing
And if you are going to take profits, scale out. Don't
Well,
sell
and
100%.
quite frankly, if you write a cover call against a long-term investment and you get called out, you should buy the stock again.
you should pick back up.
I mean, that is a fascinating double downgrade to me ahead of the election. Like, because if the Dems win both seats, you're going to see solar stocks get a short-term bump. I don't know how sustainable that will be, but that is a fascinating double downgrade ahead of the election.
Yeah,
Who did the downgrade?
Goldman double downgrade First Solar, which makes no sense to me.
Goldman double downgraded?
Yes, yes. I completely disagree with that.
I mean, how don't you wait a day or two? You know, like.
And if you want to be neutral, I could respect a neutral call saying, hey, valuations, price got ahead of itself, all that kind of stuff, whatever. But it's not a sell just because they see potential quote unquote cyclical headwinds, Matt. I hate it when I hear like catchphrases like that. Cyclical
Headwinds.
Yeah,
Let me think about what cyclical headwinds that Goldman is looking at for First Solar. Yeah, I can't think of any on the top of my head,
I disagree.
honestly.
So what they're doing is throwing shade on the solar company.
It's a really, it's a really good try. I mean, you almost
Hey,
got to chuckle.
I'll give him a B for effort.
I
I was
laughed.
close to chuckling
I
on it. I was
Yeah.
close.
All right.
got me.
But looking at it from a fundamental perspective, Tim, yeah, I mean, First Solar is a little bit overextended. It's a little bit overvalued. I wouldn't be downgraded based on political headwinds, though, or cyclical headwinds. I mean, I don't understand that one. But from a valuation perspective, yeah, I mean, you got to be a little bit concerned with First Solar with a 49 PE ratio, a 60, average, 60 average P ratio that, lost money in 2019, lost money in 2020. So it's, I understand it from a valuation perspective, but so I couldn't disagree with the downgrade from a valuation. But if you're talking political or cyclical headwinds, yeah, they're Goldman's missing the beat, and they need to call Larry Fink.
Yeah. By the way, I love Issachar's guitar flips comment here. We're getting the dad jokes rolling here today, Cody. You started something. Cyclical headwinds mean they value wind power over solar, so they like in the headwinds part of that.
Yeah.
Yeah. No
Gotcha.
courtesy
Nice.
laugh.
Okay, I
no,
get
no
it, I get
courtesy.
it.
No courtesy laugh on that one. Dad jokes are
Yeah.
tough. I get it. Dad jokes
The
are
dad
tough.
jokes are tough.
Cyclical headwind.
Which, by
That,
the way,
that took me a second though. That took me a second. I was like, what? No, I get it. CSIQ, yeah, it wasn't just for solar. It was basically an industry. So great point
Yeah.
on that. But
I just don't think Goldman Sachs was a very bright call. That's all.
I don't think this is the right call from Goldman Sachs at all, to be perfectly honest. I think the political and the cyclical I think they're tailwinds, not headwinds, quite frankly. And number two, they downgraded CSIQ as well. CSIQ is a very fundamentally strong company, CSIQ.
I like the technicals here too.
Oh,
Look at
CSIQ, we're talking about
high
a Canadian
base.
solar company with a high base that, has a P ratio at 11, a forward at 12, a PEG ratio of 56, and a price to book at 154. That is not something you downgrade, not with an EPS growth of 2020 at 26% down, but with the snapback 17% growth expected next year. Their valuation on CSIQ is rock solid. And maybe, just hypothetically, maybe I know so much about CSIQ's valuation because they might hypothetically be a Tackle 25 or a DSM pick. We'll have to wait till the Tackle 25 coaches show tonight, boys and girls. I'm excited for that, by the way. But that is a mistake to downgrade CSIQ. That's a ridiculous call on Goldman's part.
I agree with that. And by the way, just looking at, kind of the nature of the show, the clock as well, I do want to move on to one thing that I did promise our viewers out there, hashtag Team Tackle. I had Emily, she had a covered call candidate that she was looking at as a potential trade.
Emily, before you get started,
Yes, Mark.
would you like to hear your song before or after your analysis?
Oh, let's do it after my analysis.
right.
Oh, it's got to be the end of the show.
I lost a bet to Emily, and I got to pay him.
Yeah, I'm looking forward to this as well, based on the Redskins Cowboys game a couple weeks ago, if people remember. Emily, you had a couple of candidates you were looking at. Which one did you want to bring to the show here and kind of show us?
We're gonna go with DKS, Dick Sporting Goods. Cody, first of all, you're talking about covered calls, and this is kind of like what my mind map is when I look at covered calls. I have to first determine, is it going to be a quick trade?
DKS.
DKS.
I'm just out for the cash flow, DKS, or is it an investment? So that's, first of all, that's my first part of the whole process. Is this going in my IRA, or is it going to go into my margin account? Because that will determine how much I'm going to spend on it, right? So that's the first process. So I'm going to give you both the analysis, and you guys tell me. So if I'm going trade, I'm looking at a margin account. So this is a $59 stock. So you're looking at about $29.50 if you did it on margin. So if I'm doing this as a trade, I'm looking at DKS. I had a nice little breakout today. It's got that old resistance level at 63.30. That's what that's where that old resistance level is. So I start going through my process. I go to the trade tab and I start looking at my options chains. Now this has good volume and it has weekly. So I like that it has weekly. So I'm going to start up with that 31-day, Cody. Now, if I'm going for straight up cash flow and we just go with our typical covered call rules, we go with the 40 delta, that would put me at the 61.5 strike price. However, knowing that I have that resistance level at 63, I might just go out a little bit further because if it does continue to run up, I also want to capture some of that appreciation as well. So I'm not just going to automatically cap myself at 61.5 if I know that it's breaking out. So I'm going to look at that 63. I'm going to sell that for $1.15. And if I ran my numbers right, it was actually, was it $1.15? Yes, $1.15. So if I run my numbers right on that one, so 63, well, when I did this earlier, it was $1.52, but it would be a 2.5% ROI.
Yeah, you can still get $1.50 in here.
Yeah, because those been,
the bid 140, the ask 165.
It's $1.52. I'm sorry, I was looking at Cody's last price there. So yeah, it would be $1.52. And that would put me at an ROI of 2.5%. Now, this is a dividend payout stock. It's got a PE ratio of 13. So even if I went investment side, I could still pan out a trade where I can kind of give myself more time and let the trade play out. So if I was just going cash flow, this is what I would pick. I would do the 63, get my $1.52, 2.5% ROI in 31 days, call it a day. If they take my stock away, I also get the appreciation. So what, $500 total? If I get the appreciation. If not, I get to keep the cash flow and do the covered call again next month. It continues being a cash flow trade. Now, if I'm putting on the investor hat, and I don't necessarily want to have to micromanage this, and maybe I want to hold on to the shares. I don't want to cry like Cody if they take them away because, we made money, right? So if I'm looking at the investment side of it, I'm not going to necessarily go and look at the weeklies. I might go out and look at the monthlies. So that would put me out at the 45-day one. So that's a little bit outside of our window, but still right in line with where we are. Now, it doesn't give me a whole lot more deltas to pick from, but I want to look at that 65 one. Why? Because again, we know resistance is at 63.5. And if it breaks out at 60, that means it could get to 65. So that gives me a little bit more time in the trade where I don't have to necessarily worry about having to roll that call option if I had to, because I want to keep the shares or any of that stuff. I can just kind of let it sit there and just kind of do its thing. Now I'm going to bring in a little bit less ROI, but it is a dividend paying stock. So that covers for what I'm going to get in my cash flow. And that's how I would go about doing a covered call with a DKS. So if it's an investment, I'm just going to shoot for the cash flow, and then look at the chart as well. Look at, we talk about the 3 C's of cash flow, right? You look at the chart, the cash flow, and the cushion. And, you want to make sure that you give yourself enough cushion, make sure that you're getting enough cash flow to meet your standards. I always go for at least a 2% ROI if it's not a dividend payout stock. If it's a dividend payout stock, I'll go a little bit less because it is paying a dividend. So, you look at the chart, it's, been slightly bullish. Now it's kind of been sitting sideways. It's trending upwards today. Nice green candle today. Perfect trade for a quick 30 days or a long-term investment.
Let's get some input here, guys. Emily, first of all, thanks for sharing your trade idea here with us. And number one, DKS was a member of the Tackle 25 2020 edition, Matt. And also it happens to be one of these stocks that maintained its role on the list in 2021. Little sneak peek to tonight's show. And by the way, out there, if you're watching, Coach Matt is going to be unveiling all of the list, all of the stocks, and talking about them, answering questions for our coaches here tonight, or for our students and our team out there tonight during the Coaches Show, 8:30 Eastern. Mark, you first, though. What are your thoughts on Emily's idea here around Dick's?
I'm looking at naked put levels right now.
What I failed to mention is that this is an area that I have not been heavily invested in. So if I'm looking at it as an investment side, it is only running behind this sector, consumer discretionary. It's only behind financials, basic materials, and technology. So based on our sector rankings that we have on Tackle, this is, an area that, that's been doing well all year long. So why not have some exposure to that?
I mean, one of the things I like about Dick's Sporting Goods is that you get some really long-term. I'm looking at a multi-year weekly chart right now. You can get some time periods where it will just like for a full year consolidate. I really like that in a cash flow covered call stock where you can get that long-term stability. Of course, in COVID, as many retails did, it crashed, quickly rebounded, right? It was relentless on the weekly chart for several months. So, I mean, it shows that there was a lot of love there. I mean, these long-term consolidators like this, I really like for cash flow stocks. So sure, it's just finding the specific entry in this longer-term consolidation pattern. If you put this to a weekly chart, I mean, you just see how, just the consolidation pattern, if you're new to charting, like one of the things, if you're new to charting, break it down to a longer-term time frame, a weekly chart. It helps smooth out some of that action. So
Matt, thoughts? Emily's trade idea, Dick's Sporting Goods here.
Well, yeah, I mean, Emily's rock solid on her analysis regarding where she wants to write, what she wants to do, reward to risk. Love the analysis. I'm looking at Dick's from a just, you mentioned it's in Tackle 25 stock next year, and it is. This will be now the second year in a row Dick's maintains its list, or its place on the list. And again, I remove companies if there's a better opportunity. I remove companies as valuation changes. But when you're looking at Dick's here, that right now, and you're saying, okay, this is a company in a space, discretionary space that like Emily says, I haven't had a lot of access to, but I do want some area of influence here. You're looking at the discretionary. Dick's Sporting Goods is a wonderful pick there, in my opinion. You're talking about a stock in the last year that's up 17, 18%. In the last 6 months is up 37%. But when you look at it from a valuation perspective and not just a price perspective, you're looking at a stock that opened up last year. Think about this for a second. You're talking about a stock in DKS for those who want to follow, talking about a stock that opened up last year at about 47.5, crashed all the way to down to 13 before it recovered on the back half of last year. And you would think with the price going up 18, 19% in from the year, and you would think if the price going up, 35, 36% in the back half of the year, you would think valuations might be a little stretched given the fact that, we're talking about a retail company, right? We're talking about a retail company that in the last 6 months has went from 13 to 59, guys. You would think valuation is stretched. Well, think about this from a fundamental perspective. Last year, we're starting out the year, Dix is, as a market cap right around $4.2 billion, PE ratio at 13, PEG ratio at 1.62, paid a nice little dividend at 2.28. Those are really, really good numbers from a valuation perspective. And then when you look at Dix this year, up 18% on the year, the back half of the year just went gangbusters from 30 to 58. I mean, it was just a really, really, really good growth environment. Once again, you would think that would stretch the valuation argument of Dix. Well, Dix coming into this year at a $59 price tag versus last year at a $46 price tag, we're talking about Dix now having a 13 PE ratio with a forward PE ratio of 10.5 and a PEG ratio of 1 and a price to book of 2.1. Valuation, and I want you to think about this, valuation is actually better right now with the higher price on Dix than it was last year. Why would you ever remove that from a list? I mean, they're doing what they need. They have a lower PE ratio, a lower PEG ratio, a better price to book ratio because revenue has increased faster than the price has. Never bet against the American consumer. That's my story on Dix. All of which is to say, I always support the Queen.
The Queen and her covered calls. Are you kidding me? One thing I love about this, Emily, is just knowing your journey and the way that you've embraced cash flow over the last 4 or 5 years. Your system. As I heard you discussing this, I mean, your system about what levels, what strikes, and why, and what you're looking for. And I think that's a fantastic lesson for any new student out there. Great idea, Emily. Thanks for sharing it with the team. And if you're out there watching the show right now, just everybody say, great job, Emily, or thank you, Emily, something like that. Really, really cool for a halftime show. One last one I actually wanted to get some takes on as well, guys. And last thing from me here is Apple Computer. And Matt, you guys were talking about it in the chat a little bit earlier. Yeah. And some of the conversation you guys were having is the same internal conversation I've been having myself here. It was an option report pick over the weekend. It had a nice little flag. And Cody, bring up AAPL if you can here. And the nice little flag came into a deeper retracement on Monday with the market selling. And now you've got an inside candle. So here's a simple question. How do I update my trigger? I was going to be.
You realize bullish retracements have been a legitimate pattern for the last 100 years of our market cycle, and to stop being a pansy because a bull flag pattern turned into a retracement. That's how you update it.
Yeah. Is it a better setup than it was Friday?
Yes, it's a better setup. It's a bullish retracement. Yes, it's a better setup.
Not only a bullish retracement, you see a forming cup and handle here, a very large cup and handle forming right there. Look at that. You can trigger here, you can trigger there. No, I can see that because you can trigger here and then you can trigger again on the break.
Well, you can trigger that on a bullish retracement. I disagree on the cup and handle, but the bullish retracement, short-term trade here, the only question you have, because you like the trend and you like the pattern, you like the support level here far more than you liked it just a couple of days ago. I think reward to risk ratio is better now than it was a couple of days ago. I like everything about this setup better now. Think about just a couple of days ago when we liked that flag-based pattern coming off the rising 9 as a momentum. You didn't have any confirmation there. You didn't have any slowing momentum there. You just liked the zone that Apple was in, right? You liked the zone if we could get slowing momentum and confirmation off that 9, and then it was go time. You trade that momentum style. what you're seeing right now is more of a traditional bullish retracement in the market. And even though bullish retracements were not the pattern of the year in 2020, bullish retracements have been a traditional technical pattern for a very, very, very long time. And it is going to take the market a little bit of time to wake up to the power of bullish retracements, because they're so used to high base breakouts and flag based patterns. Those are the two patterns that were dominant in 2020. Flag based short term momentum triggers off the 9 EMA, high base consolidations trigger off clean breakouts. Well, those patterns change as the market changes. I think you're going to get back to some more traditional bullish retracements. Why do people fear 4 days down in a row after a stock went up 30 points?
Shouldn't. No,
Literally,
you
you're
just
talking
remap, you just remap the
Goldilocks.
trade.
You're talking Goldilocks bullish retracement here.
Yeah. Yeah.
So if you're looking at the trade as a flag, you apply flag-based principles on it. If you're now looking at the trade as a retracement, you trade retracement-based principles on it. And if you don't know the difference between a flag and a retracement on triggering and stop loss placement, then you need to accept the fact that you need education, and you need to go get into the step system, and you need to review how to trade those specific patterns.
Mm-hmm. Mm-hmm. Yeah, one of the option report picks over the weekend, obviously, and I still think it's very healthy, very much set up. And I saw you guys chatting about it earlier. It looks like a lot of team tackles
I
also
like
got
to
this
set
one
up
on their
better
radar.
today than I did a day and a half ago.
Yep. And there's a bunch of other ones on those reports I'm eyeing.
Well,
But
and again, the only question I have on Apple is where's the trigger and where's the stop? And on that, you got to break it down from an intraday perspective. And from an intraday perspective, if you'll go down into a 30-minute chart, please. If you look at that on a 30-minute chart, you're going to start to see a little bit of support form around the 128 level over the last couple days. You're going to see a little bit of a breakout of that 130, and then on the intraday analysis, you see that retracement coming into 130. And about 30 minutes ago, when we were talking about it in the chat during the halftime report, I was talking about what's most important for me right now is to see that 130 intraday level hold. And so when I was talking about it was during that doji candle as it was testing 130. Now you see the confirmation of that 130. I honestly think aggressive traders could literally trigger right now, like literally this very second, and be perfectly fine with it from an intraday perspective. If you're looking at more additional confirmation, you're looking at getting above the 9 EMA on the daily chart. I believe that 9 EMA on the daily chart, where is that 9 EMA? Is like 3070 something, 3050. So you're looking somewhere in the 130 120 level, excuse me. So I totally understand more conservative traders saying, I like the support bounce on the intraday, but give me actually confirmation on the daily chart. The confirmation on the daily chart would start with reclaiming that 9 EMA and ultimately the high of today. There's a lot of different ways to play it. I like the aggressive style here on Apple, quite frankly, but I totally respect the hey, let's wait for confirmation and not just buy the support bounce.
And I think that's the type of analysis, obviously, you got to break down when you see candles like this. When you thought you had a flag, now you got a retracement. You got to go to the intraday, find levels that you're looking at. And I think that's exactly what Team Tackle out there did. I appreciate that breakdown, Matt, as always. Guys, that's what I've got here for our show. Let's start moving into our final thoughts and wrapping up. There's several things I do want to talk about to make sure everybody out there is aware of it. We've been mentioning it all day, wrote about it in the Tackle today, talked about it yesterday on the podcast. Tonight, Coach Matt and myself will be on the Coach's Show, 8:30 p.m. Eastern, for all of our Team Tackle out there. If you're a member, make sure you show up live. Let's have some fun. Matt's going to go through all of the different lists, the Tackle 25 stocks that are optimized for cover calls, dividend fireworks, poor boy cover calls, our dirty, sexy money stocks that averaged 109% return last year. Got a lot of new stocks on those lists, as well as a new list called the ESG Top 10, which is our environmental, social, and governance type stocks for sustainable investing. Very much excited about the event tonight, Matt. Anything you want to talk about in that regard?
No, I mean, this is one of those moments where pro members be there, right? We're going to go into some detail on those lists, how we approach those lists. And yeah, you can always catch it on the recording. But I'm going to do some Q&A with the team after that. It's not going to be in the recording. So the recording is literally simply going to be me going through the list. We're going to have conversations outside that. So definitely be there live. And I think this is one of those moments where the unveiling of the Tackle 25 guys, you got to be there. You got to understand how that sauce is made. Like Mark talked about, this was Mark's first year in helping put together the Tackle 25 and all the subsequent lists. It's a little bit different when you understand how those lists are put together and what goes into those lists. And we're going to have some very open conversations about it. So, the performance last year alone was DSM was 109.3% per stock, guys. Time in the market's important, but timing is important as well. Be there tonight, guys. I'll see you in the coaching show.
Yep. And last thing, Marky, obviously we've got a promotion going on at Tackle Trading that is now live, and it's been live for a bit. It's got 4 more days on it where our annual pro is on sale. It's going to be the last time we have it on sale for some time. Anybody who's been around Tackle Trading knows kind of when we do our offers around the holiday season and whatnot. If you're a pro member and you want to lock this in, Mark, they can either email or they can go right here to the store page or the Welcome 2021 page as well. Cody, if you can drop that link in the chat.
Very quickly, we do 3 offers a year. We do a Thanksgiving, Cyber Monday offer. We do a New Year's Day holiday offer, and we do a July 4th offer. This is your best opportunity to move forward. If you have been waiting for a community, if you've been waiting for systems, if you've been waiting for education, if you've been holding off, stop holding out. Be a part of Tackle, be a part of Tackle long term. It will pay dividends. I promise you. Ask any Tackle Trading member. It will pay dividends for you long term.
Marky, any final thoughts from you on the market, on anything that we've
Listen, I got to pay a bet. I'm going to do it right now so I can get this off my to-do list. Now, on Thanksgiving Day, the Washington football team, and Coach Emily, we love her. She has horrible taste in football, but she is a diehard Washington football team fan. She won a bet. I was going to get McRibs. If she won, she wanted me to write a song praising the Washington football team who won their division champ. So, Emily, are you ready to receive your bet?
So ready. I've been waiting for this all this time. Let's go.
There better be a ring at the end of this.
And this is to the most wonderful time of the year, the holiday song. So I apologize to whoever wrote that. Who did write that? Anyway, somebody wrote it. I apologize to that individual. All right, here we go. It's the most wonderful team of the year, with the banner a-hanging and cowboys crying in their beer. It's the most wonderful team of the year. It's the hoggiest season of all. With receivers a-catching and DNs a-sacking and Alex throwing the ball. It's the hoggiest season of all. Tampa Bay, we are hosting. Tom Brady will be toasting. Antonio will fall in the snow. Buccaneers will tell ghost stories, and we'll tell the glories of the Washington team long ago. It's the most wonderful team of the year. We have Riggins a-running and Theismann a-gunning and Manley showing no fear. It's the most wonderful team of all time. Tampa Bay, we are hosting. Tom Brady will be toasting. Antonio will fall in the snow. Buccaneers will tell ghost stories, and we'll tell the glories of the Washington team long ago. It's the most wonderful team. Yes, the most wonderful team. Oh, the most wonderful team of the year.
Well done. Well done. Beautiful job.
Wow.
That the Washington football team went 7-9, and the best trade of the week is laying the 7.5 and taking the over on a parlay.
It's the
with the Bucs and Tom Brady
season team of all time, Emily. There you go.
Thank you so much. It was worth the wait. Thank you very, very much. Loved it.
It was beautiful.
Loved it.
I'm giving it a double downgrade. I don't know what you guys heard there. So,
Colston Tom Brady. He went to Joe Theismann.
No,
wow.
I got double thumbs up over here.
He went to Riggins.
He went to Riggins.
Very good. And by the way, you have a wonderful singing voice, Mark.
Their team did go 7-9, and the Miami Dolphins at 10-6 are sent home. So I'm salty.
I don't understand how you guys are in the playoffs, but it's all right.
Yeah. Good luck to your team, by the way. I would love nothing more than to have you knock off Tom Brady and those Bucks. And
Oh, trust you
God
me.
win.
We want to. We want to.
Dude,
All right.
I turn on Alex Smith. That's all I know.
Love that dude. Love his story.
Love
Absolutely.
Alex Smith.
Love that dude.
Love Alex Smith.
It's hard not to root for Alex Smith. Yeah,
Yep.
his comeback story is pretty amazing. All right, guys, that's our show here today. As always, appreciate you guys. If you've not done it yet, subscribe, click the bell. We go live every day. The markets go live. Can't promise you a song every day, but Marky, excellent job. Well, really well done. We'll be back tomorrow. And by the way, Coach Tyler will be joining us tomorrow. As always, have
Respect for paying out your bet, Chucky.
and respect. Absolutely
Very
respect
good.
for paying up on the bet. We're done, guys. We'll see everybody.